Hey everyone, welcome back to the channel. Today we're diving into a question that pops up a lot in personal finance circles. Do high-yield checking accounts actually exist? We all know about high-yield savings accounts. They're everywhere. But what about a checking account that gives you a great interest rate on the money you use every day? Is that just a myth, or are there real options out there? Let's find out. First, let's set the stage. For decades, the deal with checking accounts has been pretty simple. You get convenience, they get to use your money for free. The average interest rate on a traditional checking account is, let's be honest, basically zero. We're talking fractions of a percent. It's so low that most of us don't even think about it. The bank gives you a debit card, online access, and maybe some free checks. And in return, they don't pay you anything for keeping your cash with them. That's been the standard model forever. But things are changing with the rise of online banks and financial technology, or fintech. The competition for your money is heated up. These newer institutions don't have the massive overhead of traditional banks with physical branches on every corner. They can pass those savings on to you, the customer, in the form of better rates and lower fees. This is where the idea of a high-yield checking account starts to become a reality. So, what exactly is a high-yield checking account? Simply put, it's a checking account that offers a significantly higher annual percentage yield, or a PY, than the national average. Instead of earning 0.0 something percent, you might earn 1%, 2%, or in some cases, even more. It combines the everyday functionality of a checking account, like writing checks, using a debit card, and paying bills with the interest-earning potential you'd normally associate with a savings account. It sounds like the best of both worlds, right? To get that juicy high interest rate, you usually have to meet certain monthly requirements. Think of it as a series of hoops you need to jump through. Let's break down what those common requirements are. First, direct deposits. Many high-yield checking accounts require you to have a certain amount direct deposited into the account each month. This could be your paycheck, a government benefit, or any other regular electronic deposit. The bank wants to be your primary financial institution, and direct deposit is the best way for them to ensure that. Second, debit card transactions. This is a big one. You'll often be required to make a specific number of debit card purchases each month. It might be 10, 12, or even 15 transactions. The bank makes a small amount of money, called interchange fees, every time you swipe your card, so they're incentivizing you to use it more often. Note that ATM withdrawals usually don't count towards this total. It has to be actual purchases. Third, you'll likely need to enroll in e-statements. This is an easy one. It saves the bank money on printing and postage, and it's better for the environment. Most of us prefer digital statements anyway, so this is usually not a big hurdle. There might be other rules too, like logging into your online banking portal at least once a month or maintaining a certain minimum balance. The key is that you have to meet all of these requirements every single month to earn the high APY. If you miss even one of them, you only make 9 debit card purchases instead of 10. Your interest rate for that month will typically drop to that same old, sad, near 0%. Now, let's talk about another important detail. Tiered rates. Not all of your money might earn the top-tier interest rate. Many of these accounts have balance caps. For example, an account might offer a fantastic 3% APY, but only on balances up to $10,000. Any money you have in the account above that $10,000 limit might earn a much lower rate, or even no interest at all. This is a way for the bank to limit their interest expense, while still attracting customers with a flashy headline rate. So, it's vital to read the fine print and understand exactly how the interest is calculated. So, with all these rules and conditions, is a high-yield checking account actually worth it? Often, for big spenders, the rewards from a premium credit card will far outweigh the interest earned from a high-yield checking account, especially with those balance caps we talked about. Also, if your income is irregular or you don't have a direct deposit set up, you might struggle to meet the monthly requirements consistently. And if you're not meeting the requirements, you're not getting the high interest rate, which defeats the whole purpose of having the account in the first place. You'd be left with a complicated checking account that pays you nothing. So, how do you find these accounts? You're not likely to find the best deals at the big, traditional brick-and-mortar banks. The real gems are usually found at online-only banks, credit unions, and smaller community banks. Credit unions, in particular, are known for offering these types of accounts, which they often call rewards checking. Since credit unions are member-owned and not-for-profit, their goal is to return value to their members, and rewards checking is a great way to do that. When you're comparing options, don't just look at the headline APY. Dig deeper. Look at the monthly requirements. Are they realistic for your lifestyle? Check the balance cap. How much of your money will actually earn that high rate? And don't forget to check for fees. The best accounts have no monthly maintenance fees and offer perks like ATM fee reimbursements. An account that charges you a monthly fee can easily wipe out any interest you earn. Let's walk through a quick example. Let's say you find an account offering 2.5% APY on balances up to $15,000. The requirements are a $500 monthly direct deposit and 12 debit card purchases. If you keep an average balance of $10,000 in that account for a year and meet the requirements every month, you would earn $250 in interest. That's $250 more than you'd get from a standard checking account. But if your main credit card gives you 2% cash back and you spend $2,000 a month, that's $480 in cash back a year. In that scenario, you'd have to decide if you can meet the 12 debit card purchases with small transactions, while still putting your major spending on the credit card. It's a balancing act. In conclusion, yes, high-yield checking accounts absolutely do exist. They are not a myth, but they are not a one-size-fits-all solution. They are a specific financial tool designed for a specific type of user, the disciplined, debit card-agun, direct depositing consumer. If that's you, then you should definitely seek one out. It's a fantastic way to make your everyday money work a little harder for you. But if you're a die-hard credit card rewards enthusiast, or if your financial life is a bit less predictable, you might be better off sticking with a simple, no-fee checking account and keeping the bulk of your savings in a separate, true high-yield savings account. The most important takeaway is to be honest about your own habits and to always read the fine print before opening any new account. Don't let a flashy interest rate blind you to the requirements and limitations. Thanks for watching today. I hope this cleared up the mystery of high-yield checking accounts. If you found this video helpful, please give it a thumbs up and consider subscribing for more content on how to make your money work smarter. Drop a comment below and let me know if you use a high-yield checking account and what your experience has been. See you in the next video.